BHP reporting a weaker than expected third quarter when it comes to iron ore production, dented by a pandemic-related labour crunch that's particularly noticeable in Western Australia and the planned track renewal works which capped production at its Pilbara operations. Now, despite the headwinds, no change to forecast for the steelmaking ingredient ahead, but there is a bit of a pessimistic outlook for other commodities, slashing production guidance for copper and nickel. This as it flags volatility and inflationary pressures mounting due to those ongoing crises in Ukraine, of course, but it does see conditions improving for 2023. Taking a look at shares today so far, down just under 3% in this morning's trade. So what do our experts think of BHP? Howard, I know there at Teaminvest you're a little wary of resource stocks given that where commodity prices track. Nonetheless, it's pretty hard to avoid BHP given the weighting it has in the index.
Yes, and certainly if the index matters to you, you obviously can't. It's an enormous part of the index. Our Teaminvest members don't really look at the index. They look at the individual businesses that they own. And I think very few, if any, of our members own BHP. It's not that we think it's a badly run business. It's an exceptionally well-run mining company. But having said that, mining companies have no control over future prices. They're price takers, not price makers. And of course, at the moment, they're doing very well because commodity prices are up, but we don't know that they'll stay up. So, if you're saying, I want to own shares in businesses where I can be confident earnings per share will be materially higher in 5 and 10 years' time, you can't say that with BHP. And that means the other problem with BHP is how do you decide that it's going to be good for your portfolio? Because if earnings per share aren't going to grow, the share price may not grow. The best time to buy resource companies is when everybody's saying how disastrously low resource prices are, not when they're talking about how high they are. So I think it's a great company, but I wouldn't own it in my portfolio.
All right, Mathan, what are your thoughts then? Is it in your portfolio?
We did have it, but we got out when iron ore was 200 plus. So we got out on that peak, and BHP has surprised a lot of people. And I think it's a lot to do with what's happening on the macro trade. As I said, a lot of people globally, because of the inflation trade, are chasing commodity exposure, and BHP by default becomes a massive player. And now that the shares are not available in the UK, they have to come to Australia to buy it. So that's been a huge positive for the stock and our market. In a lot of days when markets have been down, BHP by itself has held our market higher. So it's had a good bounce, but you have to remember, we're pretty close to where we were around June, July last year. And at that time, share price, iron ore was a lot higher. So in that context, you have to remember that we're pricing in a fair amount of optimism. And the production weakness shouldn't be a surprise because you've seen that through Vale, you've seen it through Rio. It's a common theme that's playing through in the commodity sector. Inflation, cost inflation, product inflation, all of these things are playing into their cost structure. So it's tough, but they are a great player. BHP is being managed as well as it's been managed in the last 10 to 15 years. So I don't have an issue with that. I think the inflation cycle plays out for a lot longer. I mean, we started talking about this 2 years ago. The market realized it probably about a year ago, and still discounting it as transitory, more or less. I think that's a bit delusional, but that'll find its way through. But I think BHP will do quite well. We're in a commodity cycle. If you look at the capex cycle with most miners, they are not spending that much. So people are going to find things are going to be expensive for a lot longer. So I think the commodity cycle plays out for a couple of years. Am I chasing BHP here? Probably not. I'll wait for it to come back. I think you're already seeing iron ore starting to top around here on the 150 odd, and it's going to come off. China's having a fair amount of lockdown. That's the main user. So when you've got your customer in lockdown, things will get weaker a bit. And the other thing to remember is global growth is coming back. So again, a lot of these things, too much priced in. Outlook is a bit sketchy, so I'm staying out.
Can I take that as a hold though?
Yeah, look, if you've been there and you've had the run up, you've
Yeah.
got the buffer. Now, fund managers are not going to sell because they've gone up and down, up and down. They're happy to hold because it's a big chunk. So, for a retail investor looking at the long term, I think the commodity cycle still plays out for a while. It's probably the best commodity exposure out there.